In the currency quadrant, taking a look at the September Japanese yen, which experienced a big drop after rallying for 2 straight sessions. Today we dropped off the high after the U.S. CPI report. It actually rallied, and by it I mean the yen, in 6 of the last 7 sessions and is up 2.68%, including today, where we reached the highest levels today since January 3rd of this year, but then pulled back dramatically off that level. However, the yen still finished positive today versus yesterday's close. The low today, 70.20, was only down 0.16%, but the high, 71.12, up 1.15%. Like I said, that was the highest level since January 3rd of 2024. However, by the time we got to the close, we were only up a little bit more than 0.1%. BOJ board member Junko Nakagawa signaled that rate hikes are still in play early this morning, which boosted the yen. She said in a speech to local business leaders in Akita in northern Japan, "I think the degree of monetary easing will be adjusted if the outlook for Japan's economy and inflation is realized, and the current level of real rates is extremely low." You put those two together, and that signals that rates would likely be higher. And this likely drove the yen to its 9-month highs earlier this morning. But then we got the CPI figures, and the sell-off from the highs likely came after the CPI figure when we got the reaction in U.S. short-term rates, where the 2-year yield, for example, had a double-digit flip from negative to positive, literally a double-digit gain from the being down 4 on the 2-year to being up about 8 or 9 after CPI. And then the probability of a 25 basis point rate cut by the Fed here in the U.S. is now over 84%, and that's the highest level we've seen for the smaller version of rate cuts from the Fed in over a month. So all of that contributed to the yen selling off from its highs today.